So getting back to info systems, they kind of leverage the low wages in India, and there's a lot of software engineers and software programmers in India, and their pay compared to United States or Europe is quite a bit lower. So they're able to leverage that kind of around the world, and had this pretty steady profit and revenue growth. If we look at the long term of that, let me get it up here. So there is quite a bit of volatility in the stock. Back in 2009 it was at $3, and we did rally up to the recent high of 12, so it's like 400%, and you were still getting that small dividend along the way. And we had this big correction here. Fortunately, it got as low as 7, I missed that, but I got my entry point here at 9, which is, you know, close to where it was trading back in 2011. So that's just one hopefully I can hang on to, and with a dividend and capital gain, maybe get a 7 or 8% return. Close that out. So that's, so again, so it's a set of IT services, and they have over 200,000 employees, so they are very large, and they operate in 40 countries around the world, and in 20, they have software like for 20 different types of industries, so extremely well diversified. And one I think I could just hopefully forget about for a couple of years. And I did add to some income plays. I've mentioned in previous videos, I added to SIA.T, which is a senior living, which is a retirement home. Of course, there's been a lot of bad news regarding retirement homes and COVID-19 and the deaths, but I haven't heard anything too bad with SIA.T, but their share price has been taken down quite a bit and hasn't recovered that much yet. So I took an initial position in this well, just a month or so back, and I did have it before the market crashed, and I sold it out. So I'm just kind of rebuilding the position that I had, and we can see here it was up at $20, and we can see from 2009 it's been a great investment. Even from a capital gains point of view, we went from 9 all the way up to 20, and all this time here, back in here, is paying like 11% dividend, 11% yield. Of course, the yield came down, and as the price went up, and we dropped right down to $10, which in effect doubled your yield. So, but I got in back here around 12, and I'm getting about a 7% yield. And I think if I remember correctly, that one pays its dividend out monthly. So that's another one. We know there's an aging demographic. Hopefully the economy does turn around. I think their occupancy rates are in the high 90s, and so I can see this share price maybe recovering. If it recovers to the $15 level along with a 7% dividend, you're going to get a double-digit return. So again, if things get really bad again, I always mark my average price on the daily chart. This is the weekly chart. If it falls below that, I'll sell right away. As I've said probably 100 times, I never want capital gains taken away from my dividends. So just close that. So that's us. And then today actually I did a purchase of, I've had this one before, and it's Rogers Sugar, and it's exactly as you would think. It's a sugar company in Canada, I think the largest, and it was paying, I got an alert on it, it was paying a 7% dividend, and the price again has been pretty volatile. We're looking at going all the way back to 2007. You can see it kind of goes from $3 up to $7, $4 up to $7. This last hit sell-off, it went down to $4. I picked it up today for, what's it trading at right now, roughly $4.75. And again, the dividend is 7%, which I think is excellent. And there's also a chance over the years that it might move back up to this 6 or $7 again, giving it again that double-digit return. But I'm quite happy if it stays here. Hopefully it doesn't drop back down to the $4 level. But we've got pretty solid support at that level. And actually, their sales last quarter were up a little bit because of the phenomenon with shelter in place or everybody staying at home. There's more people cooking. As you know, you go to the grocery store, now you can't find flour, yeast, baking soda, a lot of times sold out. So sugar is one of those components for baking, and their sales are going up. The actual operations, though it's costing them a little bit more because the safety measures put in place for their employees, it is not affecting production. So I think their dividend is quite safe. They've also expanded into maple syrup, so I don't know if that's going to be a kind of a positive or negative. But if you go to one of my favorite websites that I've mentioned in the past, dividendhistory.org, we can see here that the dividend today is, again, this is paid out 9 cents, so it's roughly 40 cents a year, paid out quarterly. But that 9-cent dividend, we can go all the way back to 2009. It paid a 3% dividend. And then 2010, roughly 2012, so 8 years ago, the dividend's been at 9 cents. So I'm pretty confident with 8-year history of a 9 cent per quarter dividend that they're going to continue paying that out. Last year wasn't a particularly good year, but if you look at, I quickly looked at the cash flow statements, and I think they do have negative earnings, retained earnings, but more concerned about their cash flows, and it looks like they'll be able to continue to pay that dividend even during this time that, you know, we might go back into a recession or possibly a depression. So I did like this one again. I'll see what happens. I just bought that today, so I just bought a small amount, but I will add to it if it stays where it is now and moves up a little bit, and maybe get a total return of you know, maybe 10% over the next couple of years. But I'll be happy with the 7%. So trades that I did. Again, not too much, and I did add to a few other ones. Dominion Utility, which I've talked about in the past, just pays a good solid dividend. Electrical generation, so it should be pretty steady. But getting back to, I talked about getting out of looking for an asset outside of the financial markets, because I kind of believe that the Federal Reserve banks are the root of all evil. And even if you don't believe that, just the amount of money printing going on, I think as a hedge, you need to look at assets outside of the fiat market system. And there's only a couple there, which would be land, gold, silver, and Bitcoin. So I did a little bit more reading on Bitcoin I have in the past, and I decided to start buying a little bit more through Coinbase again. And after it hit its got down to about 5,000